Hey everyone, thanks for checking out this video. My name is Travis from Master the Market, and this video is going to be dedicated to scalping and scalp trading. Now, as most of you that watch my channel probably know, I focus mostly just on trading stocks. But the nice thing about this strategy and the nice thing about scalping, based solely on technical analysis, is that you're going to be able to apply this strategy to trading all kinds of different things. So if you're somebody that trades options, or if you trade cryptocurrency, forex, futures, whatever it may be, you're going to be able to use this same scalp trading strategy within any of those different markets. Okay, so with that being said, what exactly is scalping and what is scalp trading? Really what this refers to is just a day trading method that's going to take advantage of very quick and very small price fluctuations in the market. So scalping is a little bit different from regular day trading because when you're a scalp trader, you're specifically looking for very small and very quick price fluctuations. But as a day trader, many times you're looking to take advantage of price action over the entire day. And that leads to being in position sometimes for hours at a time. When scalping, you're probably going to be in and out of your positions many times within minutes. And really the whole idea behind scalp trading is that these small profits are going to add up over time. And along with those small profits and those small moves in the markets, you're also going to be reducing your risk and looking for small losses when the trade happens to move against you. Okay, so with that being said, one of the main ways that I actually scalp trade stocks is simply by looking at some of the largest gainers for the day and looking for any clear levels of support and resistance for those stocks and simply scalping them between those levels of support and resistance. Now, as you may know, I actually share some of the biggest gainers and the biggest market movers for the day almost every single morning on my Twitter account, and that is in the form of a morning watch list. To give you an idea of what this looks like, something like this I post almost every single day. It's going to be a list of the biggest movers that are gapping up and the biggest movers that are gapping down, along with the news that is causing them to gap up or gap down. And I actually include some levels of support and resistance on these for the stocks as well. And like I said, this is one of the main ways that I actually trade some of the stocks on this morning watch list. I simply look for them to fall within these levels of support and resistance. I then look to buy at support and sell at resistance. And believe it or not, this simple method of trading can lead to some really great and very quick and easy profits in the market. Okay, so if you don't already, make sure to follow my Twitter at MTM_trader. So that way you can keep up to date with the morning watch list and you can look to take advantage of those scalp trade opportunities as well. Now, although that is one way to quickly scalp trade stocks that already have that momentum in the market, that's not exactly what this video is going to be based on. And the strategy itself that this video is based on is going to be a little bit different. So instead of looking for those horizontal levels of support and resistance, like the ones that I share on the morning watch list, for example, this strategy is going to rely a little bit more on trendline support and trendline resistance, which simply put are just slanted lines of support and resistance. Together, when you have those two lines together in a parallel line, that's going to form what is known in the market as a channel. So the whole idea behind this scalp trading strategy is to look for these channels in the market, look for when the price is bouncing clearly between a level of trendline support and trendline resistance, and scalp the stock between those two lines. You would use the trendline support just like you would use any other flat horizontal line of support, meaning that you can look at it as an opportunity to buy. And if the price of the stock happens to then break below that trendline support, that's going to be a red flag, and that's going to tell you that that trend is no longer intact, which can be a good signal for you to cut losses on that trade. And then on the other side of the spectrum, the upper line above the channel is going to be the trend line resistance, which can be used, of course, just like you would use any other level of flat horizontal resistance, meaning that you look at that as an opportunity to sell at the highs before the price reverses back to the downside. And really, as long as the price is falling within this channel, you can repeat this process over and over and over. Again, those small profits between these trend lines is going to add up over time and is a really great way to scalp trade stocks with a very small and limited risk. So as a quick example, I wanted to share this chart for WNW. This is the 1 minute chart, of course, a very short-term time frame, which is most likely as a scalp trader what you're going to be focusing on because you're going to be doing very short-term trades. And I wanted to specifically share this example because it is a great example of a channel in the market, but more specifically, it shows that everything's not going to be picture perfect. And what I mean by that is simply put, if there's a level of support, whether that be flat support or trendline support, most of the time the stock is not going to perfectly bounce off that level of support and then bounce back up. Same thing is going to be true with resistance, whether it's flat resistance or trendline resistance. It's not always going to have a perfect top at that resistance level before falling back down. Many times there's going to be false breakouts and there's going to be false breakdowns, which are simply going to happen in order to try to fake you out. But as long as the overall price action is still remaining within these two trend lines, the channel is really still going to be intact, and you can still use these lines to scalp trade between them. So in this specific example, if we go ahead and look at these green dots on the chart as where we would buy the stock and the red dots as where we would sell the stock, you can see that there are a few really great opportunities here to buy at this trendline support and scalp trade it all the way back up to that trendline resistance over and over again until the trend is really no longer intact and the price starts to kind of trade and close multiple candles below that trendline support. And then you can see it squeezes back up and breaks right above the trendline resistance, showing us that it's no longer really respecting these levels of support and resistance. And going forward, they're not going to be as great of an opportunity to buy and sell at as they were in the past. But regardless, before that happens, there are multiple really great opportunities to scalp trade this stock based on this channel trading strategy. Now, you may also be noticing that I really didn't put any opportunities to buy and sell earlier on in the morning, and that's simply because if you're watching this in real time, and if you pretend like this entire section over here of the chart didn't yet happen, and you were just watching it over here, you're not going to necessarily know that this is going to be a channel that's forming later on in the day. You have to wait for some of these lows and some of these highs to actually start forming before you can start to see this as a channel and before you can start to draw your levels of trendline support and trendline resistance. Okay, now with all of that being said, this is probably going to lead you to the question, if you're falling under the pattern day trader or the PDT rule, because scalp trading is requiring you to trade multiple times a day in many cases, the pattern day trader rule is unfortunately going to limit your scalp trading abilities. For those of you who may not know, this PDT rule is simply a rule that is put into place by the SEC that limits US-based traders to only 3 day trades per 5 business days if their account balance is less than $25,000. But because this video is based on scalp trading and scalp trading requires you to do many day trades in order for those small gains to really start adding up, I just wanted to, in this video, share a few quick tips to help you kind of beat this pattern day trader rule and increase the amount of day trades that you actually have in your account. And one of the ways that you can do that is by simply having multiple different brokerage accounts. The PDT rule means that you have 3 day trades per 5 business days in each of your brokerage accounts, meaning that, of course, if you have 2 different brokerage accounts with 2 different brokers, for example, one with E-Trade and one with TD Ameritrade, you're going to have 3 day trades in each of those brokerage accounts per 5 business days, giving you 6 total trades per week. Now, obviously, this is still not ideal because if you're under the pattern day trader rule in the first place, that means that you have less than $25,000 in your account, and it's not necessarily going to be the best idea for you to have to split that money up even further into 2 separate accounts. So another way that you can actually bypass the pattern day trader rule is by actually just using a cash account. The nice thing about cash accounts is that the pattern day trader rule does not apply to cash accounts, meaning that you can simply day trade as much as you'd like with that cash account as long as you're not using any margin. And with a cash account, you're going to have to wait up to 2 days for that money to actually settle in your account after every single trade. And the way that this differs from a margin account is with margin, after you sell out of a position, the money that you get from selling your shares is going to be immediately back into your account and ready to be used for your next trade. But with a cash account, that money is going to show up in your account, but you're going to have to wait up to 2 days for that money to actually settle in order for you to use it again on another trade. That's of course the one major downside to using a cash account, but still, if you're using only a small portion of your account on every single one of these scalp trades, then it's not going to be a big deal for that small portion of your account to take 2 days to settle because you're still going to have the rest of your account over those 2 days to place any other trades that you'd like. So at the end of the day, this is going to allow you to day trade much more frequently than if you were somebody that was under the pattern day trader rule. Okay, so that's going to be a wrap for this video. I hope you learned something about scalp trading and found this helpful. If you did, please make sure to like the video and subscribe to the channel so you don't miss out on future videos and future trading lessons. And as always, if you'd like to learn a little bit more about day trading, swing trading, and even long-term investing, make sure to go down to the link below and check out our programs at Master the Market. But anyway, until the next video, thanks for watching. I hope you enjoyed, and good luck with your trading.